Hello, listeners. This is Gyong Young. Welcome. Here we dive into complex financial articles, often from sources like the Seoul Economic Daily, and, well, we break them down, make them simpler, easier to grasp for you. Today, we're looking at some major moves in the Korean financial market. Think big policy shifts, foreign currency stabilization efforts, some new rules for digital finance, and, wow, record bank earnings.
Yeah, it's quite a mix, isn't it? There's a lot happening right now. Understanding these core movements is really key, I think, for seeing the bigger picture.
Definitely. Okay, so let's start with stability. There was some exclusive news about the government using state-run banks, the big ones, to stabilize the foreign exchange market, especially with these large international investment deals happening.
That's right. We're talking specifically about that U.S. investment deal. It's huge, a $350 billion total commitment. And the annual cash investment, the outflow, could hit a maximum of $20 billion. That's a lot of capital moving out.
$20 billion a year. Wow. Okay, so that outflow definitely needs some kind of buffer, right, to stop the one from bouncing all over the place.
Exactly. And the government's strategy is to use these state-run banks as that buffer, a sort of second line of defense.
So how much, financial firepower are we talking about here if things get shaky?
Well, if we look at the Korea Exim Bank, Kestim specifically, they have the capacity right now to issue about an additional $3 billion in foreign currency bonds each year.
$3 billion.
Yeah.
Okay. How does that stack up against the potential outflow?
It covers about 15% of that $20 billion annual maximum outflow figure we mentioned.
15%.
Yeah. And if you add in the Korea Development Bank, PDB, which is also expected to play a role, their combined capacity could potentially reach $6 billion annually.
$6 billion. That's starting to sound like a more substantial cushion.
Yeah.
But why the state banks? Why are they the chosen tool here?
Good question. It comes down to, well, a couple of things. Credibility, mainly. Kexim has a really high credit rating, Moody's A2. That's the same as Korea's sovereign rating.
Okay, so top tier.
Exactly. So when Exim issues bonds, they're seen as very high quality, very safe assets. This helps stabilize the market, almost acts like a benchmark. And it's cheaper for the government than, say, direct intervention.
Right, using their reputation as a tool. And we see this kind of role elsewhere too, don't we? Like with that massive shipbuilding project, the MSGA one, the $150 billion deal.
Precisely. That's another great example. They step in where commercial banks are hesitant, especially with things like refund guarantees, RGs.
We hear that term a lot with shipbuilding. Can you just quickly break down what an RG is and why commercial banks aren't keen?
Sure. Think of it like insurance for the ship buyer. The buyer pays the shipyard in stages, right? The RG is a guarantee from a bank saying, look, if this shipyard messes up, fails to deliver your ship, we'll refund your payments.
Okay, so it protects the buyer.
Right. But for a bank, it's a big long-term risk. These are huge sums of money, complex projects. Commercial banks, especially after 2008 and with stricter capital rules, they're just reluctant to take that on.
So the state banks have to step in, otherwise those big deals might not happen.
Pretty much. It keeps that vital sector moving. It's almost a structural necessity for Korea's economy.
Okay, that makes sense. So that covers the stability, the sort of traditional risk management. Let's pivot now to the future, digital finance, specifically one-pegged stablecoins. There was a stablecoin forum recently laying out guidelines.
Yes, absolutely. And the focus there was overwhelmingly on user protection, preventing a coin run scenario. That's the nightmare everyone wants to avoid.
Right. So what are the main safeguards they're putting in place?
Okay, 3 key things came out of that forum. First, the collateral backing the stablecoin. It has to be over 100% of the value issued. No fractional reserves, none of that. You need more assets than coins.
Over 100%. Makes sense. What else?
Second, an explicit guarantee of the user's right to get their money back, the redemption right, or assure. They're looking at things like the U.S. Genius Act as a model.
The Genius Act? How does that apply here?
Well, the idea there is that if the stablecoin issuer goes bankrupt, the coin holders aren't just regular creditors standing in line. They get first dibs, priority access to the collateral backing their coins.
Ah, okay. So your claim is directly tied to those specific assets.
Exactly. It builds trust. And the third requirement is, well, pretty standard but essential. Clear rules on governance, risk management, and public disclosure, transparency.
So solid foundation rules. But what was interesting, I thought, was that it wasn't just about rules. They were also talking about how to actually use these one coins, right? Driving real-world utility.
Yes, that's the really forward-looking part. They don't just want a safe coin. They want a useful coin. One big idea was integration with crypto exchanges.
like a bit or Bithum.
Exactly. Imagine using a regulated OneCoin as the main trading currency on those platforms. Upbit apparently has something like 10 trillion won in customer deposits. If even some of that shifted to a one stablecoin.
That instantly creates huge demand and usage.
Yeah.
Okay. What about the K-pop connection? That sounded intriguing.
Oh, absolutely huge potential there. Think about platforms like Bubble or Weverse, where fans interact with artists. Right now, the platform fees can be really high, sometimes up to 30%.
30%? Wow.
Yeah. Plus, you have issues with international payments, settlement delays for creators. Using a OneCoin could potentially slash those fees, speed up payments, make the whole thing much smoother for fans and artists globally.
That sounds like a killer app almost,
Yeah.
solving real problem.
It really does. And then looking even further out, there's this idea of agentic commerce.
Agentic commerce, AI doing the shopping for us.
Kind of, yeah. AI agents make the transactions automatically. Gartner thinks this market could be worth, get this, $30 trillion by 2030.
30 trillion.
Massive.
Yep.
And OneCoins are seen as potentially ideal for these tiny instant machine-to-machine payments within that ecosystem, especially for Korean goods or services.
Fascinating. A whole new digital economy infrastructure. Okay, let's shift back to the traditional giants for a moment. The big four financial groups, KB, Shinhan, Hana, Woori, they had a really strong third quarter, didn't they? Yeah.
Unbelievably strong. They blew past what the market expected. Their combined net profit for Q3 was 5.4863 trillion won. That's up over 10% from last year.
Wow. And for the year so far?
Already a record. Cumulatively, they've hit 15.8125 trillion won in net profit. The forecast now is for the whole banking sector to maybe hit 18.2 trillion won for the full year. Another record.
How are they managing that? With interest rates maybe peaking, talk of slowdowns?
Well, the main engine is still net interest income. That difference between what they earn on loans and pay on deposits, the net interest margin, or IN.
Right, the NM.
It was expected to maybe shrink a bit, but it actually held up, even rose slightly on average to 1.84%. They managed that spread really well.
Okay, so the core lending business is still very profitable.
Very. But importantly, non-interest income also saw good recovery for most of them. Things like fees from stock trading, selling funds, wealth management, that picked up as the market sized bit better.
So they're firing on, well, multiple cylinders. What does all this profit, this balance sheet strength, actually mean for the broader economy? You hear this term productive finance.
Exactly. It means they have the capital now to really push towards that goal. Productive finance, or NGoDeal, is this policy push to get banks to lend less, relatively speaking, towards just household debt like mortgages.
Which has been a big focus for years.
Right. And instead channel more capital into strategic industries,
Yep.
future growth areas.
Like what specifically? Where does the government want that money going?
Think high-tech sectors,
Yeah.
AI development, advanced manufacturing, biotech, areas where Korea sees potential for innovation and exports. The idea is the banks are strong enough now to take some calculated risks on these future industries, not just play it safe with mortgages.
Okay, using that financial strength to fuel the next wave of growth. Got
Yeah.
it. Finally, let's touch on something with very immediate impact.
Yeah.
The Sado Yak Fund and debt relief. What's happening there?
This is a big cleanup operation, essentially. The Sado Yak Fund just bought up 5.4 trillion won worth of old delinquent debt, the really long overdue stuff from public bodies like CAMAMCO and the Korea Happy Fund.
5.4 trillion won. And what does that mean for the people who owed that money?
For about 340,000 debtors, it means debt collection efforts stop immediately, which is a huge relief, obviously.
Okay, collection stops. Does the debt disappear?
For some, yes. For the most vulnerable groups, people on basic living support, those with severe disabilities, their debt related to this purchase will just be canceled, wiped out, or array without them needing to do much.
Wow, okay. And for the others?
They'll generally go into debt adjustment programs, structured ways to deal with the remaining debt. The main point is to stop the immediate pressure and hopefully get these hundreds of thousands of people back on their feet economically. Confirmation starts in December.
Right, a path forward.
We've covered quite a spectrum today, haven't we? From state banks acting as FX shields to designing rules for digital money and these massive bank profits funding a shift in lending.
It really ties together under this theme of managing risk and finding stability, whether it's in traditional markets or this new digital frontier. But it does leave you wondering, especially about the state banks. When the market gets risky, commercial players step back and the state steps in. Is that sustainable long-term, relying on them as the shock absorber for everything from FX to shipbuilding to industrial policy, or are we just shifting risk onto the public balance sheet? Something to think about. So we have covered the topics of FX stabilization, stablecoins, and financial holding group earnings. We will return next time with quick news. This has been Gyang Young of the Seoul Economic Daily. Thank you.